FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome. You are listening to the Financial Survival Network. It's Kerry, Lutz. It is Monday, 3/30/15, and time for John Rubino of dollarcollapse.com, co-author of The Money Bubble. And John wrote an interesting article, and it just reminded me of a guy named Howard Katz. He was, for years and years, publisher of a newsletter called The One-Armed Economist, and basically, in a depression, which I would argue we're in, everybody gets poorer. And the key is to preserve your wealth, and therefore you stay ahead while everyone else is getting poorer. If you can just stay in the same place, you're ahead. And pretty much what you wrote is that why are we all feeling poorer? And basically, everything that you need to buy, pretty much, or much of what you need, is going up. And one thing we talked about before the call we didn't really discuss was taxes. Taxes are going up along with everything else, which is the worst thing to be raising in a recession/depression. But hey, let you take it away.
Hey, Kerry. Yeah. Actually, we're not all feeling poorer. You know, the people who own stocks and bonds, which is to say the top 10 or so percent income and wealth-wise in the U.S. are doing great. They're feeling much richer. But the rest of us do seem to be feeling poorer, even though we've had a 6-year-long recovery now. And so, within the economics profession, there are lots of different theories about why that is. And there are a lot of different possible culprits, globalization, and as you said, higher taxes. And one of the things that doesn't get a lot of mention, but is actually pretty important, is that our spending patterns are changing, because some things are getting more expensive and some things aren't. And lately, it's been healthcare. And to a lesser extent, education. We're spending a lot more at the doctors, from 15% of the average family's income up to 20% in just the last few years. And also, of course, college tuition keeps going up. Now, these two things don't make you feel richer when you spend more on them. They're just maintenance, right? Going to the doctor or getting some kind of a medical procedure done is like changing the oil on a car or fixing the transmission. It just restores the status quo.
Yeah, there's no great satisfaction when you say, gee, I just spent $1,500 on a new transmission. I feel great about that.
Yeah.
That's just so good. Great way to spend your money. No, you want to kick yourself in the butt for not selling the car 5 minutes before the transmission gave out, because that's just wasted money, it feels like.
Yeah.
Right.
And so to the extent that crowds out spending on stuff that we consider fun, like eating in restaurants or buying new cars or clothes or whatever, we feel poorer and less free because we can't do the things we want while we're doing the things that have to be done and putting all our money into that. And that's a lot of what's happening right now. People, they're making more or less, the average family is making more or less what it made a few years ago. But it's spending more on stuff that doesn't bring it immediate pleasure. And so that creates a sense that that we're regressing rather than progressing. And if this goes on much longer, the obvious result is that we start looking around for people to blame, and we blame the guys in charge. And that's a big part of the sense of panic that you get from the government right now and from the world's central banks. They don't want to be blamed in the next election for the fact that the average family feels like it's moving backwards instead of forwards. So they're flailing around trying to do whatever they can. But unfortunately, a lot of what they're doing actually makes things worse, because you push interest rates down to zero or negative territory, and the savings of the average family no longer generate any income. And no longer give them the kind of money that they need to the extent that it ever did. It no longer gives them disposable income and allows them to spend money on stuff that makes them happy. So this is looking like a no-win situation, because the only tool governments have now to keep the economy going is to push interest rates down. And that actually impoverishes savers without really helping anybody else other than the super rich who own lots of stocks and bonds, which is where that new money coming into the system is going. So it's reached the point where there aren't any good solutions, and the frustration of the 90% of people who feel like they're just struggling to get by is going to boil over at some point. And that's when it gets really interesting. It'll be fun to watch from a safe distance, except the people in charge won't be at a safe distance. So anyhow, we'll see. That's just a trend to watch. If people continue to feel poorer and less free, then this bubbles up at some point and starts really affecting elections. And, you're seeing it around the world right now, and it's liable to manifest in the U.S. in the not too distant future.
Well, what happens when you start getting to that point is largely what you've seen in the U.S. is that the fiscal solution to this problem, and I use solution in quotes because it's not a solution. The only solution, you and I agree, John, are free markets. There really is no other solution. Everything else is a Band-Aid that does more harm than good because we have the crowding out effect. But the fiscal solution of jobs programs, of stimulus, all that, which is useless, has largely been taken off the table because of divided government. And I don't see it coming back, especially now that the Republicans are responsible for Congress. But at some point when it gets really bad, you will see them start to give out money again, right? They're going to give out
absolutely.
Money because that's something they do really well. Right.
Last time the Republicans were in charge, which wasn't that long ago, government spending soared. So these guys are basically all about getting reelected, just like the Democrats. They have slightly different spending priorities, but in times of crisis, they both go to the same toolbox. And that toolbox just has a couple of tools now. It's got government deficit spending, and it's got easy money. And that's basically it. So, a combination of those two things is all we're going to get in the future, unless we enter some kind of a really dramatic boom, which it doesn't look like we're entering. Most of the recent economic data, with just a few exceptions, have pointed in the other direction. The strong dollar is starting to slow the economy down. And there's a decent chance, if you extrapolate these trends out for another 6 months, that we'll be back in recession before year end. So we will, at that point, be back in some version of QE and bigger government deficit spending. The whole 2009 through 2013 policy mix will just be brought back because that's all they have. So if you can't accept a recession, because the level of your debts will turn a recession into a depression, then all you can do is lean against that with ever easier money. And so the theoretical question becomes fascinating at this point. How do you ease when interest rates are already pretty close to zero? So how far down into negative territory can you go? And we'll find out. That's coming. We're going to find the limit. We're going to figure out where this stuff just flat out stops working and becomes totally counterproductive. But we don't know where that is yet, because around the world, interest rates are negative in various places, and people are still putting their money into those sectors. They're still buying bonds with negative yields. They're still putting money in the bank when you get negative 0.25%. And so that's not the limit. We'll find out what the limit is, but we don't know what it is yet.
There is a limit. The limit will be found. I agree with you. It's just a matter of time. But these jokers that are running things are really destroying things. I mean, look at Stockman. He's been on a rant for, it feels like years already, and totally ignored. But at some point, they're just going to crash this thing because it wasn't designed. It destroys incentives to save, and it turns the world into a world of spenders and not savers. The system was designed for people to save, John. Save, deferred consumption, and saving for investing to achieve a return so that, when you're in your 40s, your 50s, you're saving a large portion or as large a portion of your income as you can so that in your 60s and 70s, when you no longer have to work, you can take that deferred compensation, that deferred consumption, and then spend it and then live on it. But because of inflation, because of what they're doing now, that model doesn't work. And this is a recipe for disaster for the entire world. And what's really going to be bad is the pension plans, because the pension plans, public and private, around the world were all designed this way. This is public savings. I mean, it's private, but it's public. You know what I'm saying? They were designed along this model. Insurance, another method of savings, maybe not the most efficient, maybe not the best way of doing it, but it's a form of savings. It's no longer going to work. All this stuff is not going to work. And when it fails on a massive scale, John, well, call out the National Guard. I don't know what you do. But when we return, we got lots of things to talk about. We got the Brexit. We got what's happening with the euro and French elections, so much more on the Financial Survival Network.
FSN Radio. It's all about what's next.
Every week the show is growing. Would you like to be a part of it? Then go to clubfsn.com and help support us with $1, $2, $5, or $10 a month and get a host of premium content with newsletters dropped into your mailbox, free books, private audio clips, webinars, and much more. Then join clubfsn.com. If you want to get ahead of the trend and ensure your family's financial security before it's too late, go to clubfsn.com and sign up.
The Financial Survival Network. It's all about what's next.
And we are with John Rubino of dollarcollapse.com, co-author of The Money Bubble. And it's Monday, 3/30/15. And John, situation in Europe, it just keeps deteriorating. The euro, I haven't looked at it yet this morning, but I know the dollar was up when I looked earlier, which means that the euro has to be down. It was hovering around 108-ish last Friday, I think. You looked at the euro for a good laugh yet this morning?
Yeah, it's down a bit today, Kerry. The dollar's up a bit. And who knows why these daily squiggles happen, but a pretty good guess today is that Greece is, as always, back in the news. They were supposed to submit their proposals over the weekend for getting their financial house in order to continue to get aid from the powers that be in the Eurozone. And the stuff that they submitted isn't being very well received right now. And basically, it's being said that they're just a set of ideas. They're not concrete proposals. But if you look at some of the stuff they're talking about, it's just from the standpoint of the idea, it's pretty scary. First of all, they're talking about taxing capital outflows, which is a form of capital controls, right? If you try to take money out of the country, they're going to tax it to keep part of it and to prevent you from taking it out. Which means that since they put it on the table, that means it's publicized. To the extent that anybody has any money in Greece anymore, even after the last 6 months or so of capital outflows, and they know that the government is going to limit their ability to move money at some point when these laws get passed, they're going to move their money out now. So you're going to see a huge exodus of capital. And that's basically one of the rules of capital controls, is that you can't telegraph them. If you tell people ahead of time that you're going to do this, they act accordingly and they get their money away from you before you can mess with it. So that is the situation in Greece right now. And so it's not improved at all. And it looks like they're one step closer to maybe accidentally leaving the Eurozone. And that is affecting the value of the euro today because there's clearly more turmoil coming. And I'm sure the way that this gets worked out, well, I'm not sure, but I suspect the way this gets worked out is eventually they just toss enough money at Greece to keep them in the Eurozone, because the alternative, a disorderly exit from the Eurozone is potentially catastrophic. But getting from here to there is going to be very messy. And then afterwards, it's going to be messy too, because Italy and Spain and Portugal, they'll all line up for the same deal. If Greece can elect anti-Euro people and then get an acceptable deal from Germany, then the electorate in these other countries will draw the same conclusion that you put Beppe Grillo in power in Italy, or Podemos in power in Spain, and these guys will negotiate the same kind of deal that Greece got. And so you trade economic turmoil in the short run for electoral and political turmoil in the intermediate term. And that's basically what the Eurozone's looking at. They don't have an easy solution here. And so this will be in the news for quite a while. We'll be able to talk about this every Monday for 6 months if we want to. And then who knows? But another interesting thing along the same lines that was announced over the weekend is that Australia is considering a tax on bank deposits. Now, it's not enough that bank deposits yield zero or less than zero in a lot of the world. Now countries are starting to tax them. And so your return, which used to be flat, is now going to be negative because you're paying taxes on the money that you got sitting in the bank. And the point is that the government is telling you, don't save. You have to invest aggressively. Don't just put your money, figuratively speaking, under the mattress. Don't leave it in a money market fund or a bank account where you get a negative yield. You got to put that to work in the stock market, or junk bonds, or real estate, or whatever, places where easy money is favoring asset prices. But to do that, you have to take pretty big risks. The stock market goes up and down. It can drop by 30% in the normal course of life. Real estate, same thing. In the last 20 years, we've seen house prices go down dramatically twice. Junk bonds, of course, obviously, they fluctuate just like equities and can have horrific stretches of a couple of years. So the money that you used to think of as cash, as something you were putting away for safekeeping that you might need in the near term, the government is telling you, Nana, invest that in stuff that is going to fluctuate dramatically. And we've got your back. We'll make sure that you make money in the long run with it. Well, governments can't really guarantee that. And the idea that they can is a huge misconception that will be borne out pretty soon. But in the meantime, Australia and Europe and the US and Japan and most of the rest of the developed world, they're all funneling people out of cash equivalents and into highly risky asset classes that at some point are going to correct. And so that the money you thought you had that was cash is going to be worth 30% less, or 40% or 50% less. And again, it comes back to how people are going to behave when they suddenly feel a lot poorer, because as healthcare costs grind away at our disposable income, that's a slow process, but a noticeable one. Well, when our savings go down by 20 or 30%, that's going to be a fast process of feeling very poor very suddenly. And you combine those two things and you get electoral turmoil. And that's something that we're seeing around the world, where, especially in Europe, where anti-Euro parties are being elected now. And a big part of it is this process of the middle class and the working class feeling poorer instead of richer over time. And in France, for instance, they just had local elections, and the ruling socialists came in third. They lost to Sarkozy, who's the former president and who didn't accomplish much when he was in office, and the National Front, run by Marine Le Pen, which is this right-wing party that used to be very marginalized, but it's anti-Euro and among other things, and that's winning it a lot of votes. So if they had a national election right now in France, it would be a runoff between the conservatives run by Sarkozy and the National Front, which is more conservative than the conservatives run by Marine Le Pen. And so this is a situation that you see playing out across Europe, but France is a very big, very important country within the Eurozone. And for them to have this kind of electoral turmoil. An election in which an anti-Euro party comes in a close second or even has a chance of winning, that's a huge deal from the point of view of the stability of the Eurozone. And so between Greece and right now France, and then Italy and Spain, where the same kind of electoral issues are playing out, the Eurozone is pretty much guaranteed turmoil for the foreseeable future. And as goes the Eurozone, so goes the rest of the world, because that's the biggest single economic entity on Earth right now. And it is looking like it's got a very tempestuous couple of years ahead of it, or at least 6 months, if
it survives at all. If it survives this thing, John, it's how long can they keep kicking the can down the road is really the issue. I don't know the answer to it, but what I do know is that that you need solutions. All right, just like with your kids' problems, if you don't help them find solutions, only bad things are going to come their way. Well, I do know with this kind of thing, if you don't find solutions, only bad things are going to keep happening to these countries. They're going to keep going down the tubes. And the same with the United States here. We haven't found solutions to our banking issues. We haven't found solutions to anything. And really, John, what the hell are they doing here?
Well, they're doing what has worked in the past. That's the thing. Without realizing that each time they stopped a recession by taking on more debt and lowering interest rates, they reset the clock, but set the stage for a bigger crisis in the future because all that new debt and those extremely low interest rates didn't go away. So then each successive time that they've come into the market and distorted the market with even lower interest rates and higher debt, they've created the conditions for a bigger crisis out there. And we're doing the same thing now. We've lowered interest rates, as we talked about, to zero. We've raised debt levels around the world by something like $57 trillion since the last crisis. So now the crisis will be that much bigger. And they only have these same tools to intervene and to try to fix things the next time we have a crisis. But it's really questionable whether the tools are going to work next time around, because where do you go if interest rates are zero already or negative already? How far down can you go? How much more can you borrow if the world has debt right now that equals about 300% of GDP globally and has unfunded liabilities and derivatives that just dwarf the official debt? Where can we go from here? And so that's what we're going to find out.
We're going to find out eventually. That's for sure. And the sooner we find out, the better. Anyways, we got to run, but find John's work at dollarcollapse.com. You can find the link to his book, The Money Bubble, on our site, financialsurvivalnetwork.com. While you're there, check it out. Got news coming from hundreds of different websites, thanks to our tireless webmaster, Stefan, who spends hours a day getting you the news that you need. And sign up for our free webinars that are coming up, as well as a free newsletter, which I'm shooting out today because the war on money continues. John, we will talk to you next week. Be well.
Thanks, Kerry.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.